everybody kind of knows already that it's coming. It's probably needed, and in light of the recent headlines with stable coins and et cetera, we know that it's out there. Some of these stuff already, we've seen Senator Lummis and Gillibrand with their legislation coming out. So let's just kind of work our way down. We'll start here and work our way down. What are your thoughts initially on regulation, and what do you think we might see by the end of the year?
Well, I would hope to see some progress with the Loomis bill. I confess that I've been navigating through it, and the March leaked version has some issues with it. One of the things that matters most to me from my background is that I spent 18 years as general counsel for the Washington Department of Financial Institutions. So I care very much about federalism. I care very much about the opportunity of state charters to compete with national federal charters. And I'm not so sure that the current draft that I had read in March necessarily does that. One of the things we need to do is preserve the opportunity of folks who are non-depository state charter trust companies to be able to be in this space, to custody digital assets, and maybe even issue stablecoin. They're regulated by banking regulators, and I don't want to see a picking of winners and losers at the federal level. There have been several attempts by certain federal agencies, particularly the Office of the Comptroller of the Currency, to try to do that. And so for those companies of scale who can flip their charter to a federal trust company charter, that's fine, but what about all the other folks? Some of whom are equally capable, if not more capable, and maybe for one reason or other, their funding wasn't as robust. And so I don't want to see that happen. And so that's one of my biggest concerns. I currently am in a different gig. I'm currently have the best of both worlds. A shout out to my colleagues, Moonstone Bank. We are a we're a Fed member, Washington State chartered FDIC-insured bank. This is a charter that's been in existence since 1886, but Farmington State Bank over in Whitman County, but we've reimagined it as a digital bank, and we're doing some things in the crypto space. But I'm concerned about other folks. Other folks need opportunity.
Sure.
And so what I said earlier about particularly things like non-depositories concern me. I also think there needs to be some more uniformity in money transmission regulation, but I can talk about that later.
Okay. Dax, what about you? You've got probably a really unique perspective on this regulation topic. Why don't you weigh in on this for us?
Sure, yeah, thanks. Well, first of all, thanks for having me here, Jonathan and team, really appreciate it. So I guess my view of the world is that it's working the way it's supposed to. That in the United States, at least, regulation is messy. The law is messy. Innovation is messy, right? So the innovators, including some of you here, are always pushing the envelope. That's your job, right? The legislators, their job is to go make laws, to just make laws. I mean, hopefully they're making laws that make some sense. Regulators are there to protect people, right? Law enforcement's there to go enforce. So it's always going to be messy. It's never going to be a one-size-fits-all. Joe mentioned the federal system versus the state system. Those are always supposed to be in tension, but we should allow both, And I guess your job, all of our jobs, is to make sure that we give feedback to regulators, law enforcement, legislators, when they get out of balance, right? Like right now, the federal side is probably too heavily weighted, right? There's too much activity in the states. You have fewer resources. Are a little bit drowned out, but there's places for state entities and federal entities. If you ask what I hope to get out this year, what we have right now is, I'll say in the crypto blockchain space, the thorniest issue. There's a lot of thorny issues, but the thorniest one is all around securities laws, and unfortunately, federal securities laws as well as state, but primarily the federal. We have been getting regulation by enforcement as opposed to clear regulation that's written down, but we're pivoting from regulation by enforcement to regulation by court decision. That we have the Ripple case and we have the library case, both of which are being litigated right now, where I hope that we get some outcome, right, that may lead to more normalized rules of the road in the security space, because the alternative is to have the United States continue to be a little bit at the mercy of the rest of the international community, because our securities laws are so broad, it restricts so much, whereas a lot of folks overseas are catching up and eating our lunch. And so we got to be able to solve that crack that nut.
Yes, very good. I couldn't agree more. Aaron, what about you?
Yeah, I'm just going to piggyback a little bit on the regulatory aspect. Coming from TaxFit, you can imagine I'm going to have a tax point of view on this. And, you know, right now there's currently a disconnect on the two sides of taxation within the cryptocurrency space overall. As an individual, if you're transacting, you know, in crypto and you're disposing of your crypto just like you would Apple stock, you have to pay taxes on that. So you're personally liable for it. But the big disconnect is traditional financial brokers, right? They have an obligation to basically provide the taxpayer the information they need to report forward. But in the crypto space, they don't yet. And so that's the whole crux of the infrastructure bill. I mean, super general and high level, but if people are making money, the IRS sees the dollar signs and the potential for underreporting. So they're bridging that gap between traditional financial institutions as brokers and the compliance and reporting obligations they have and bringing that into the crypto world. But where I think they're overstepping and not understanding is that the crypto space, especially blockchain, it's just different. It's not Charles Schwab. You know, did OpenSea think they were going to be a broker? No. So we have to find something that can be operationalized as well to, you know, not stagnate the digital asset growth. So that's what we're here to hopefully help with and make it so that you can continue to, you know, go into businesses where you could potentially be a broker, but also understanding what is and is not. And I don't think that's what the infrastructure bill does. That's what we're waiting for Treasury. But if you've worked with Treasury before, you all know V1 is never really clear.
It's never clear. Yeah. Mitchell Moose, your thoughts?
Yeah, so I've been a journalist in the crypto space for the last 4 years, so I have a little bit of a different perspective here. So Dax, earlier you said that you think that the regulations are working as intended, and I think I would disagree. So a lot of the, especially with SEC regulations, the intent of those regulations are to protect retail investors in particular. And we've seen in multiple instances in 2017 with the Ripple case and now that retail investors are typically the first people to get hosed when there is a downturn in the market. And they're also most frequently the exit liquidity for how a lot of these VC deals works. So these venture capitalists, they'll get into a lot of projects and incubate them early on, get allocations at like 1/10 or 1/100th the price of what retail investors would get access to those tokens at, and then they'd sell those tokens on the market. But I will say that the regulations are working and intended from the perspective of they tend to be reactive. So something bad has to happen typically for regulations to change. And we saw this in 2008, we saw this in the 90s with the financial crisis, 1927 as well as for the original securities laws after the stock market crash then. And I think things like the recent Terra Luna and UST collapse will actually alert regulators that there is a need and there's a substantial market here that requires more nuanced regulations than what traditional securities require. Because when you're looking at traditional securities, the middlemen, the brokers and everyone else, they do serve a function in that it allows regulators to have centralized points of contact to actually control who can get access to those assets. And when you're talking about crypto, it's a little bit more of a free-for-all where people with any guy on the internet with a wallet and enough technical savvy can get access to some pretty sketchy stuff. And I don't have a problem with that. I don't think that retail investors should be held accountable for making poor investment decisions. That's up to them, in my opinion. But what I do think needs to change is the people who are scammers, the people that are like really the underbelly of the crypto market, the people that are taking advantage of the retail market and being deceitful or lying, those are the people that I think need to be held accountable and regulators should be focusing on. The issuers that are not playing fairly by the rules and being deceptive in the ways that they market and sell these different securities.
Excellent. I want to just, I think we're getting close on time on this panel, so I'll just wrap up with this last question to you guys. And I found this really, really interesting. Show of hands, who knows who Hester Pierce is? Anybody know Hester Pierce? I'm gonna name drop some names. Hester Pierce, SEC, right? She came out in a recent CNBC interview, and she says, quote, the U.S. has dropped the ball on regulations. So what do you think, just give me like two minutes, or less than 2 minutes, just 2 sentences. What do you think we need to do to pick up the ball, to refute this? What do we need to do in America?
From my perspective, I think that one of our biggest problems is the way we do an imperfect regulation of crypto companies, crypto exchanges, etc., as money transmitters. Those money transmitter laws are different in tons of states. There needs to be, either all the states have to get together and form a compact. There was an effort to do that by the Conference of State Bank Supervisors. They only got to 24 states. And so a lot of folks went in with some very, very good intentions. Say, for instance, Gemini, the second charter ever for a crypto asset trust company out of New York, found that it could not get reciprocity for its viable trust company charter under New York banking law in other states, where traditional trust companies been able to freely get that kind of reciprocity. So they defaulted to getting money transmitters licenses. And there's been this patchwork quilt. Now, I realize I'm only taking one little segment here, but we really need to get some uniformity there. And it needs to be rational. We know enough now about this industry that we can make that happen.
Dax, what do you think? What does America, what does the U.S. need to do so we don't drop the ball?
Yeah, it's, I guess what I'd say is that to the extent that the people who are putting the products out there are being good corporate citizens and anticipate, showing how crypto can actually improve the status quo, right? Look, the fundamentals of crypto are strong. They're inclusive, as you're pointing out. Consumers want it, right? They want an alternative to the dollar, for instance, right? Want an alternative to traditional investment assets, right? Decentralization is here to stay. Regulators, government haven't yet embraced what that looks like. And they frankly, they've caught up pretty quickly, but they still don't know exactly what it is. And so it's incumbent on the crypto community, I think, to lead and to demonstrate, and to show the protections that are there, right? And so when I said earlier that it's working the way it's supposed to, this is the way it plays out in the United States, guys. And honestly, there's very little that any of my clients have wanted to do that they haven't been able to do, right? We want more clarity. We've got a lot of clarity since I've been doing this for 12 years, right? Like, we're significantly better than we were, and we have banks that actually bank you now, right? You got new banks coming into the space. So that's kind of my point, is like, if you take the long game, it's working, but you can't give up.
So first, I maybe disagree with the statement a little bit. Just because other countries may codify it faster than we do doesn't necessarily make it better, right? We're expanding internationally, and I have to say, just because it's written down in the UK, there's a lot of loopholes still. So I would say first and foremost, again, piggybacking off of you, Dax, education, like understanding the crypto industry first and foremost and all the nuances, and not analogizing it to our traditional security market is first and foremost. To actually putting in place regulations that are helpful and not vague and confusing and will just really make us spin in circles rather than move forward.
Yeah, I'll also back off of Aaron. I think people don't appreciate how much progress has been made in the last 4 or 5 years in terms of regulation. I remember I was doing an investigative piece in 2017, and I went to 5 or 6 different banks and tried to open a business bank account and said that my company would be involved with crypto. and I was only able to open it at one different bank, and then a month later they closed my account. And now I can go to any bank and they'll offer me checking and savings as if I was just an ordinary business. Maybe with a few extra checks to make sure I'm not dealing with Iranians or something, but usually it's all right. So that is one aspect of things. And also on the securities front, in 2017, the Jobs Act introduced a whole slew of different crowdfunding regulations that have been implemented around 2019, 2020. And you see places like Start Engine and WeFunder that are making it a lot easier for crypto companies to find compliant ways to raise significant sums of money. So now they can raise up to $5 or $25 million if they go through much more accessible regulatory steps than were available in the past. And I think that is what regulators like Hester Pierce should focus on, is making compliance sufficiently easy that it's a better choice than remaining anonymous or taking your company offshore or not serving US investors, because that's not the situation we want. We want investors to have access to investments, the opportunities that are transparent and disclosed. And obviously there's going to be a significant number of risks involved, but as long as those risks are transparent, I think that people should be able to make their own decision on whether to invest in them or not.
Thank you. Well, obviously regulation is coming. We don't know what form it will look like, and this is a conversation I would love to continue. Maybe we can continue it offline, and I know there's a lot more to unpack on this. But again, let's thank our expert panel, Mitchell Moose. Thank you, Aaron Fenimore, Dax, and John. Thank you guys so much for coming up. Joseph, I'm sorry, Joseph. It says right there, Joseph. I should look. Sorry, Joseph. Give them a round of applause. Thank you so much. I will turn this back over to Mr. Jonathan G. Blanco, and our next little panel will be coming up shortly. Thank you again.
Thank you so much.